Yeah, but liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, I mean, we're $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then.
The founder and CEO of Real Vision, Raoul, has repeatedly underlined the close relationship between the liquidity conditions of the global money supply and the performance of cryptocurrencies. According to Powell, as global M2 grows, it brings liquidity into the financial markets, fostering an atmosphere that is conducive to risk-on assets like Bitcoin and other digital currencies. Due to their extreme sensitivity to changes in liquidity, cryptocurrencies typically flourish when governments and central banks adopt measures like fiscal stimulus or quantitative easing, even if Bitcoin frequently swings in lockstep with stocks, particularly technology companies. Although the cryptocurrency market has recently underperformed expectations, Pa contends that during times of severe liquidity injections or financial distress, crypto can decouple and significantly outperform as speculative capital seeks high return opportunities despite strong long-term fundamentals. Powell ascribes this to the US dollar's present strength, which he warns poses hazards to financial markets, the global economy, and cryptocurrency. He thinks that major economies may soon be obliged to refinance their increasing debts, which would increase global liquidity. Additionally, in an exclusive interview with Raoul, Powell discusses his expectations for monetary policy in 2025, the impact on cryptocurrency prices, and Trump's overall economic strategy. Powell also anticipates that the Federal Reserve will be under pressure to change its policy stance in the upcoming weeks, injecting liquidity through various mechanisms to stabilize markets and support economic growth. Keep checking back as we publish the most important takeaways from this conversation. If you like this content, please like and share the video, subscribe to the channel, and enable post alerts for future updates. Thank you, and have fun with the video. Your interaction is very important for improving the YouTube algorithm and assisting the channel's growth. The video for today.
Yeah, or maybe, as I said, it could even push into, that
Early.
cycle. Alts peaked in Jan or Feb, right? Yeah, but liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, I mean, we're $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end of year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at. I'm going to flip it a different way of looking at it. Has Amazon been in a super cycle? Yeah. Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect. Right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big.
Powell is extremely bullish on Bitcoin and other cryptocurrencies and digital assets like ETHs. He is even more bullish on what he describes as the coming AI revolution. Powell believes the world is heading toward an economic singularity, which will completely change and mess with our understanding of business models, market strategies, and the global economy at large. Though Powell believes the coming AI revolution will be completely disruptive for the financial markets, he is positive that it will be a permanent and much-needed solution to the world's massive debt and productivity problems. According to the Real Vision CEO, the global economy reached an inflection point in 2008, an event that should have led to an outright financial collapse. However, banks intervened with aggressive monetary policies, effectively preventing the system from unraveling. This intervention, he argues, permanently linked economic stability to the ability of central banks to print money, meaning the financial system remains viable only as long as liquidity injections continue, at least until a more sustainable solution emerges. Powell believes that long-term demographic changes and declining productivity are the main causes of the financial instability that central banks have been attempting to address. However, he says that rapid advancements in robotics and artificial intelligence may offer the breakthrough required to buck these trends by 2030. He sees a world in which automation and artificial intelligence greatly increase productivity, enabling economies to better manage their soaring debt loads. In his view, this technological revolution could be the key to reshaping global economic dynamics and guaranteeing long-term financial stability. Let us return to the video.
Big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Yeah, and I think it's a very important function of what crypto does, right? Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation. And that's good, right? It's a lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So that, I think, is more crypto projects.
Just the amount of volume. Yeah.
Also, don't forget, unlike VC, these are coming to market instantly. So if you were to look at really early stage seed investments, and if you were to have a real-time mark-to-market on those, they'd be horrific. Are we going to die today? Are we going to survive tomorrow? Are we going to die today? I mean, that's all it is. They're the same. It's the same thing. It just happens to be the earlier stage bit that's hidden because in VC, there's no mark-to-market really until a token launches or equity becomes tradable, i.e. different people want to pay for the equity. It was my main bet from 2022 onwards.
I remember.
I'm immensely bullish on Solana. I think they have the right activity, the right pace of innovation. They're good, do good stuff. There is, so much activity on chain because of meme coins, but there's also stable coins and DeFi and all of the things that are required to build a great a blockchain ecosystem. So I think Solana outperforms Bitcoin. Outperforms Bitcoin and outperforms ETH as well. ETH is struggling. And ETH is struggling not because ETH is bad. Yes, it's lost a bit of direction, but the reality is they overbuilt capacity by all of the layer twos. Right? Anybody can spin up a layer two, so you're building endless capacity, and it only uses a small amount on the actual Ethereum mainnet. So what they've built is this gigantic architecture that's suitable for the entire finance system at scale, but we don't have that use case. So what you're seeing is it's just not generating enough activity on the base chain, and that's why it's dragging. My guess is if you are Goldman Sachs or JP Morgan or whoever, and you want to tokenize assets, tokenize equity markets, tokenize all of the finance stuff, lending markets, you're going to do it on ETH. ETH is like the Microsoft of blockchains. It's the one you won't get fired for. It's the one that has the highest level of security, the deepest developer ecosystem, the largest amount of interoperability, the largest amount of applications. There's no reason the finance system will build at scale on any other chain yet.
Remember to click the link in the description to receive the exclusive discount. For just $23 a month, our channel users can get CyberGhost VPN, an application that will protect your data while you browse and provide you with complete access to all blocked content on the internet. It is completely risk-free, so give it a try. In the description, there is a link. One of Pal's main suggestions for getting ready for the impending AI revolution is to concentrate on accumulating wealth over the next 5 years because he thinks there will be a significant change in how economies operate after that. He contends that as AI-driven automation replaces many human roles across industries, people's ability to generate wealth through traditional means will decline. For this reason, he encourages people to utilize the current financial system while they can by leveraging investments that are likely to appreciate significantly before AI-driven forces change market dynamics. His strategy centers on cryptocurrencies, which he views as a key pillar of the future economy. He suggests that decentralized digital assets like cryptocurrencies will probably become the main medium of exchange because AI agents, who will be heavily involved in economic transactions, cannot use traditional banking infrastructure because AI cannot open a bank account or interact with conventional financial institutions the same way humans do. He thinks individuals who get in early in the cryptocurrency area, especially with assets like Bitcoin and Ethereum that have already shown durability and network effects, will have a lot of chances as a result of this shift. Pal's forecast of an economic singularity raises important issues regarding the distribution of wealth and the future of labor markets and finance. According to his argument, the global economy will see a revolutionary leap in efficiency driven by automation and AI-driven productivity improvements rather than collapsing under the weight of mounting debt and demographic difficulties. If Pal's vision comes to pass, governments would need to reconsider social safety nets because AI and robotics will likely replace many employment, pending established labor markets. Economic policies and taxes, as well as asset prices, especially for stocks, digital assets, and tangible commodities, may soar as technological advancements and liquidity infusions propel a new era of economic growth. But the shift may be tumultuous with periods of economic volatility, wealth concentration, and political unpredictability. It is debatable whether this scenario will materialize as drastically as Powell anticipates, and as automation and artificial intelligence develop quickly, their incorporation into the global economy will depend on policy choices. Rates of corporate adoption and possible regulatory obstacles. Additionally, historical economic from the Industrial Revolution to the emergence of the Internet, changes in technology frequently lead to new opportunities while also appending established industries. How are you getting ready for this possible upheaval? Are you putting yourself in new markets with digital assets or other investments that could profit from an economy driven by AI? Please share your opinions in the space provided for comments below. If you thought this debate was informative, please remember to like this video, subscribe to the channel, and enable post alerts for future updates. Thank you for viewing.